Today's guest on the What Fuels You podcast is Melissa Widner. Melissa is the CEO of Lighter Capital, the pioneer and leader in revenue-based financing for tech startups. Prior to Lighter Capital, Melissa was the managing director of NAB Ventures, the VC arm of the National Australia Bank, and a general partner at Seattle-based SeaPoint Ventures. She was also the founder and CEO of Seven Software and the CEO of Northwest Industrial Supply, where under her leadership, both companies generated over a 10x return to investors. Melissa is also the co-founder and chairperson of Sydney-based Heads Over Heels, an organization that supports women entrepreneurs running companies with high growth potential. She has served as a lecturer at the University of Washington's Graduate School of Business, where she taught courses on venture capital and entrepreneurship. Melissa has also served on the boards of several venture-backed technology companies in both the US and Australia. She holds an MA from Stanford University and a BA from the University of Washington. Go Dogs. Welcome, Melissa.
Thanks, Shauna. It's great to be here.
So good to see you. I'm going to hit you with some rapid fire. You ready?
All right.
Okay. If there was a book written about your life, what would it be called?
Changes.
I love it. I love the world. I loved prepping for this podcast, I have to say. You've done so much. What is a habit that you are trying to create?
Exercise.
That's good.
On a regular basis, not a sporadic basis.
It's a game changer. Okay, if there was one social issue that you could attack and kind of solve, what would it be?
Climate change. I mean, that's an easy one, right?
Yeah. What trait do you most value in a friend?
So, honesty.
Keeping it real. I like it. What 3 words would your kids use to describe you?
Pain in the ass. That's four words.
Pain in the ass. 4 words.
Pain in ass. How about that?
A favorite off the beaten path Australian destination?
Oh gosh, there's so many. Bells at Kilcare, which is it's a great boutique place. And in fact, I'm this weekend going for I think it's our 5th annual girls weekend. It's an awesome place. Cool little boutique hotel on a beach, great restaurant.
Yeah, it's making me want to plan out. I've been to Australia, but I haven't taken the kids, and I don't think my husband's actually been. But if I go, I want to just have you help me plan the whole thing. For those who are listening, Melissa is in Australia, but you're not from Australia. You're from the US, specifically Seattle, right?
Yeah, I mean, I moved to Seattle in high school, to Bellevue to be more specific, but I absolutely consider that my home.
Yeah, where were you born? Where were you raised as a kid?
So the reason I said changes, so I was born in the Bay Area and lived there till I was about 13, then in Colorado for a little bit, and then moved to Washington just before my junior year in high school.
Oh, I didn't even know that, I don't think. How did I not know that? So what took you all over the place? How did that end up?
Well, so my parents divorced, and then my mom became a working mom from a, stay-at-home mom to a working mom. And then she got a promotion and we moved to Colorado, and that's how we ended up in Colorado. And then I ended up back in Washington and lived with my dad when I was in high school. So I always said that was such a good experience in terms of really being comfortable in a new place. Like I can go into a new place and not know anybody and be just fine because I changed schools. I think I think we moved 5 times before I was a senior in high school. And I had a really good experience in all the places and still have friends from the different places.
That says a lot about you though, specifically, because I think that a lot of people would have that experience and feel like some sort of like some people would feel disrupted by that. And I love that your perspective is kind of the silver lining of it.
Yeah, well, I think there's definitely a silver lining of seeing your mom go to work as a woman and seeing your mom become the breadwinner and do really well, So, that was a great role model to have. And I never really thought of any other path. So
yeah. Does she know that would you consider her your role model?
I wouldn't consider her my role model. She passed away a while ago. So yeah, thank you. But she had high expectations with sort of low involvement. It's like, you should do really well. And that's just the expectation. I'll go figure out how to make it happen. So
Yeah.
wasn't a tiger mom that's in there like making it happen, but it's like a,
Yeah.
this is
Set
what
the
you need
bar
to do.
high.
I wish I could do that more with my kids and let
I
go a little bit
know.
more,
It's so hard. Everybody says it's so cliche, like it is the hardest job though. And so who were some
Yeah.
of your influences as a kid? Like, did you have teachers or I guess your dad? Like, who were your role models?
Yeah, I mean, of course, your parents to some extent, and you take the good and the bad from them. But I had a great coach, a great tennis coach who was amazing, Carol Ann Castell, and a good friend of mine from high school. Her mom was a successful businesswoman, and she was a role model for me as well. So I think seeing these women, and especially entrepreneurs, I was always drawn to entrepreneurship. I was, had a little business when I was 11 years old, and so I
That's
think
awesome.
anybody who was following that path, I was always quite interested in.
Yeah. So what was your business when you were 11?
My business when I was 11 was stuffing envelopes. So I was working for an organization. I was actually walking home from school one day and saw this boy go into this building. This was down in the Bay Area. And I said, "Where are you going?" And he said, "Oh, I have a job I have a job stuffing envelopes." And I said, "Oh, yeah. What do you get paid?" He said, "Well, I get paid 70 cents per 100 that I stuff." I'm like, "Oh, that sounds pretty good. Are they looking for more people?" And he said, "Yeah." So I went and started stuffing envelopes, and I asked if I could take them home, and they said, "Yeah, you can take them home." So I took them home, and then I lived in an apartment complex, and I recruited a bunch of kids. I was
Love this.
fifth grade or sixth grade to do it for 50 cents a 100. So that was my first business. And my mom thought that was really terrible, but I realized like that's just business.
That's called business. That's amazing.
Yeah.
That's perfect. So what did you do with the money?
So I was a good saver. I was a very good saver as a kid.
Yeah.
I'm still a good saver.
I was about to say, I feel like we talked about this and you were saying
saver.
that you're still a good saver.
I think we did talk about this before, Shauna, but I was a good saver. So I saved, I mean, look, we were talking at that time, maybe a couple $100, which was huge money when you're 10 or 11 years old. But I saved.
Yeah. And
yeah. I don't have a really exciting story to tell. I saved and saved until I bought my first house in Seattle when I was 23, and it was a $100,000 house in West Seattle. And, probably the savings back then kept building up to, eventually being able to have a down payment on a house.
Yeah. And would you, if you had to do it all over again, make the same choice as far as attending University of Washington?
Yeah. Yeah. I loved University of Washington. Absolutely.
You have 4 kids, right?
Mm-hmm.
And how are any of them college? Like what?
One just graduated from University of Washington, which is
right. I remember.
Right. One is a junior at Wharton. And then two are younger. One's in high school, one's in primary school.
Yeah. So you've been through this and like asking through that perspective, it's so different when we went to school. It was just like, oh, I feel like going to school here, I'll apply there. But it wasn't this tiger mom vibe that all these kids are getting, all this pressure.
But it wasn't like, I think that's probably why I am a bit of a, I want to get involved in it because I was completely on my own. And I always think if I had some guidance, I remember filling out my college applications and handwriting them.
Of course. Yeah. And what did you end up studying at UW?
International studies with trade and finance in the Jackson School.
That's incredible. And so you had a sense at least to pursue business. You knew that you had this entrepreneurial bug. And I remember you telling me, I love the story that you told me about starting your hair bow business.
Yeah. Yeah.
Tell me more about that.
So in college, and this is in the 80s, when big hair was in, and my roommate and I started a hair accessory business, and this was scrunchies and bows, and we had like 11 or 12 different designs, and we basically created a board, and then we went around to all the sororities and took orders, and we got a couple $1,000s of prepayment orders. So that's what we did. We made bows. That's what we did in our spare time. And
where did you source the fabric and stuff?
Oh, there was a place down in Soto where you could go. It was like a wholesale, and you could get like the clips and the fabric. And that kind of thing. It was called M&M Bows. And it's
I love
interesting,
it.
my business partner, Mignon Fogarty, who was a sorority sister, she's now, we ended up reconnecting at Stanford. She was getting her PhD in molecular biology. She was an
Oh my
English
gosh.
undergrad major at University of Washington. And I was there in the business school, and we reconnected. But she's now Grammar Girl. She's like this famous author. She's written 7 books on
Oh,
grammar,
I've
and
heard of
she's
her. Yes.
yeah. So it's funny, we had a bow business together way back,
That's
and
incredible.
and
And what was
scrunchies
the
are back in. So
scrunchies are huge.
yeah.
So what was the result of that? You sold that business, right? Like actually
No,
did you
no,
make money?
no. That was just, that kept us in. Well, look, back then it paid tuition, because tuition at University of Washington was $500 a quarter, not including room and board, but the actual tuition.
Yeah.
So that paid for college, but it did lead to, the first, big job I had was running the industrial supply company. And it's actually, you probably know, the people whose dad owned it, but it was one of my sorority sisters, and her father saw me with this bow business and thought I was really entrepreneurial. And he bought this company to turn around, and I was going to go to law school, because that's what you do when you have a liberal arts degree. And he said, why don't you come in and try and run this company and turn it around? And that was the industrial supply company. So we did that. He made a 15x return on his investment. So we turned it around. It was, it was really successful. We
How
had a
old
very
were you at that
successful
time?
exit.
That's incredible.
I was 23, 20, almost 23 when I started it.
Yeah.
When I started working, it was a 45-year-old company.
So I'm asking from the perspective as as a mom. Hopefully our kids listen to this, and like, what was it about you? Like, what did he see in you that differentiated you? Like this grit, this hustle. Like, how did you show up like that for him?
Well, I think it was actually his daughter, who was my friend, who would go home, and I was doing some stock trading. It was right after the market crash in 87. I was doing some stock trading. That's where you had to get up and call your broker. And she would talk to her dad about me. I think someone who had a business and was doing this and putting herself through school, and he thought that was great, because she, I think to this day,
it's rare. It's Melissa.
well,
That's
to this
super
day,
rare.
well, it's not rare. It's not rare anymore. Now everybody in college.
But think about that back then. You're like, okay, this is my girlfriend who's started a company, who's paying her way through college, who's trading stocks, in the morning, like getting up early.
Yeah.
That was definitely.
It was weird. It was weird back then. It's not weird now. It's great. It's awesome to go to University of Washington now and see, all the businesses that undergrads are starting, and all the resources that are available.
Oh, yeah. Yeah. Would you have been successful or happy, do you think, if you had pursued going back to law school and like been a lawyer?
Probably. I mean, I think I mean, business is absolutely where I should have been. I can think back to like when I was 5 years old. I was so entrepreneurial, and not all really successful entrepreneurs, a lot of them came to it later in life. But it wasn't even a path. I don't know. As a girl, I wasn't even thinking that way. I was thinking, what do you do? And what did you do? I mean, this is going back to, Sean, I know you're a little bit younger than I am, but it was, I mean, that's what you did if you were a good student in liberal arts. You went to law school.
Right. Interesting. And so how have you kind of parlayed that into your messaging to your kids?
So, they're not going to have the same motivation that I had, because, as a child of divorce and going from, if you have changing economic circumstances when you're younger, it's a lot of motivation. And I lived in Bellevue and went to Bellevue High School, which, is the catchment is Medina. It's a very wealthy area. But we weren't wealthy at all. So that is good motivation. So my kids will not have that motivation.
Yes. A lot of guests that I've had on have had obviously financial success. And it always is interesting when I talk about how you pass on the grit. Like, I guess what is your driver or your fuel to keep you wanting to continue to take on so much?
Well, I think now with Lighter, it's what I love and what I found out that I really love. So when I sold Seven Software, that was a great exit. And it's, before that, work had always been something you did to make money and get financial security, or something I did to make money and get financial security. And then, once I had that, I thought, oh, great, now I don't have to work. I can just do whatever. And then what I found is that I just love starting companies, and I really love working with entrepreneurs. I went and did charitable endeavors, and that was great. But I absolutely love that piece of being involved in the startup. So I was in venture capital for a couple of decades, and that's great because you get to do that in venture capital. You're working with the most interesting people on the planet, startup entrepreneurs. And then lighter capital is even better because we are providing we're providing growth capital to entrepreneurs, and we're not taking any equity, and we're not taking any control. So we just get to do all the fun stuff, which is, give them capital, give them advice, give them connections. And I've never been involved in a company whose customers love them this much.
Well, it's such a great business model, and it's such a win-win. I love lighter capital also. And
I didn't start it. It wasn't my idea, but it's so good. And I knew it was good when we invested, but when I came in as an investor, but until I was actually involved in the company, I didn't have an appreciation for it.
Right. I want to go back to, we haven't even touched on I guess the advice you would give as far as getting an MBA. Did you think that
yes. And people ask me this well,
I do ask a lot of people with an MBA, and I just want your opinion on it, because obviously getting an MBA versus getting an MBA at Stanford, two different things.
Right. Yeah.
So how has that, I guess, helped propel, or how has that impacted your career?
Well, I think it opens up a lot of doors. It was really surprising to me the day I showed up at Stanford Business School, the day we all did. There were recruiters, and there were, events, really well catered events all the time from day one. And I thought, that's so interesting. Like, I'm the same person I was at University of Washington, why weren't they there?
People love the pedigree. Absolutely.
Yeah. So it really does. I think it opens up doors, but it's not all these doors are open anyway. You just have to work harder to get in them. Then it kind of makes it easier, which maybe makes people not as hungry, right? So, but I would say just it gives you, this a credibility that, whether it's deserved or not, it's going to open doors for fundraising, for partnerships, for recruiting people. So I would absolutely recommend it. I've talked to a lot of people about it, going back to business school, and they're looking at it from a absolute economic standpoint. I don't know what it costs now. It's probably like $100,000 a year or something, but they're saying, okay, I'm going to take 2 years off of work and not get paid, take that break in my career and have to pay $100,000 a year, whatever business school costs now. And they're looking at it from an economic standpoint without taking into account all the other ancillary benefits.
But were you aware of those benefits before you applied? What drove you to even apply to begin with?
Well, I think I always knew I'd go back, and I always knew that higher education was something I would do. So, business really made a lot of sense after running the industrial supply company. But was I aware of the benefits? I think, yeah, somewhat. Sure. Yeah. I think I wasn't aware of that world where, the recruiters are just knocking on your door from day one, because, that's not what I had at University of Washington. And I was in a pretty, isolated business running an industrial supply company. Yeah. Our customers were school districts and hospitals, and, that I wasn't in this, world of consulting or investment banking. So it really opened my eyes to that.
Tell me about Seven Software.
Yeah. So Seven Software was started, I did my summer after my first year of business school at Goldman Sachs. And it was really interesting seeing like these valuations that tech companies were getting compared to running an industrial supply company. But my boyfriend at the time, he was at Microsoft, and he created a product to automate procurement for internal use. And it saved Microsoft $35 million. And they were, talking about this product a lot in terms of here's the types of products you can build with Microsoft tools. So it was obvious to me that this, there was a business here. And Microsoft wasn't an enterprise software company at the time, So they had no interest in developing something like that. So we basically started the company to sell this enterprise procurement to large corporations. And so I was the CEO. My boyfriend, who's now my husband, at the time was the CTO. He was the developer. And we got our first check from a guy named Kerry Timbrell, who was at Goldman Sachs. And I had an offer to go back, and I was trying to decide if I should, take that, which seemed great to me, or start this business. And he said, you absolutely should start this business, and I'll provide you with your seed money.
That's incredible. It's like to get that vote of confidence from someone. How much did you ultimately raise?
And the first round was really small. It was $100,000. And just going back to the story on Kerry, he went to Stanford Business School I think he was class in 1980 or 1981. And he was talking about how he was in the same class with Steve Ballmer, and Steve Ballmer was going to drop out to go work for, the small company in Seattle. And Steve Ballmer had an offer to go back to McKinsey, or to go to McKinsey. And his offer was for $60,000 a year. And they're like, he said, he remembers them all talking to him, like, how can you give up that? How can you give up $60,000 a year? So he told that story and said, you absolutely have to go do this.
Yeah. And how long did it take until did you sell the company?
Exit. So Concur acquired 7 Software, and that was about a couple years, a little over 2 years. And then I was with Concur for a little under a year. So that was like
what an incredible
really
success story. That's so fast. That's not common, of course, at all. That's amazing.
No, and that's where, the industrial supply company was 5 years to an exit, and Concur was like a little over 2 years to an exit, and then really 3 years by the time we ultimately got the exit in terms of the company going public. But, you think you're pretty smart when you get a couple really good exits for yourself and your investors. And then I went into venture, and I, joined venture at the very beginning of 2000. So right, at the peak of the dot-com bubble. But, we backed companies with entrepreneurs that were way smarter than I am, that worked a lot longer and a lot harder than I did, and didn't have the success. So you realize how much, luck and timing really plays into it.
The numbers are astounding. And how important was it to you at the time to support and invest in women?
Oh, well,
I know that's one of your passions now, but when you were doing venture for all those years,
and back then I wasn't really thinking about it. I was involved with an organization called Forum for Women Entrepreneurs when I started 7 Software, and it was hugely helpful. But it wasn't until after being in BC for about 10 years and then moving to Australia, and I connected with a couple other really fascinating women, Janet Menzies and Alex Burrell, and we started this organization called Heads Over Heels. And I was just at that point just tired of, as a VC, I hardly ever saw women pitch me. So it wasn't just that
I need to actually see more women in the room.
Yeah, we just weren't seeing any. So we started Heads Over Heels as an organization. It's been around now for over 10 years, and it's got CEO and sponsors and all of that. But it was, we in the beginning it was volunteer led. But we, the way we support CEOs is, it's competitive to become a Heads Over Heels portfolio company. And then what we do is we expose them to our connectors, who are senior business leaders who are willing to open up their networks to help these women. And as you know, Shauna, you know this really well, that oftentimes it's just that one connection or one introduction that made the difference in, your company or your career.
Absolutely.
So we've been doing that for the last 11 years, and that's been
incredible.
My passion project. And so much has changed in the last 11 years. I mean,
now it's a lot of more people interested and leaning in and kind of paying attention.
Yeah.
What have been some of the results of those investments, and where are these female entrepreneurs? Are they all over everywhere, or Australia?
Yeah. So Heads Over Heels is Australian based, although we're going to do our first, because in COVID, we realized that we could do this on Zoom. So, and it works really well. It used to be all in-person events, but Zoom actually works really well. So we're going to do our first one in the US, and I'll invite you to it in March.
Absolutely.
So it's awesome. And there's been, oh gosh, I think there's been like 90 companies now that have gone through, and there's so many stories. I could go on and on, but I'll tell one. This is a woman, Sharon New, who runs a company called Expense Manager. And she was, this was a bootstrapped company. And, she had a few clients. It was mid-size. She sells her product to mid-size companies to help with their, it's not a Concur competitor, but it's for payables, to automate their payables.
Oh, got it. Okay.
So, totally bootstrapped. I think she was under 10 people at the time. And we brought her into the Heads Over Heels portfolio. She had been trying to get to MyOb, which is one of the big mid-market accounts. It's the biggest mid-market accounting platform for Australian companies. And she'd been trying to get into MyOb for a year, just to get to the right person. And at Heads Over Heels, she said one of her asks is she's looking for an introduction to MyOb. So in Heads Over Heels audience was Naomi Simpson, who's a really well-known entrepreneur here. She emailed Tim and said, hey, here's this, Tim, who was the CEO of MyOb at the time, here's this company you should look at. Tim responded right away, got her into the partnership. Her totally game-changing for her company, completely. Her company's on a different trajectory. Now they have millions of dollars of revenue, and she can track it too. Like, a lot of it is a result of that MyOb partnership. And all it took was Naomi spending a minute to send an email, and Tim, spending a minute on his time to send an email. And it was really game changing. So we have kind of story after story like that with Heads Over Heels, where it's just getting the entrepreneur connected to, the right person at the right time with a warm introduction.
Yeah. And so obviously it's not just a feel good, give back, like support women. There's measurable data that you're looking at.
Yes. Yeah.
Results. And what type of story are you seeing as far as the past 10 years? More women showing up, more funding happening. I know that in the past, it's something like 2% of women get
VC money.
Money. And it's like, so there was something like more men named John on publicly traded boards.
Oh yeah.
And like women, like these crazy, things that stick in your brain, of course.
It's changing a lot in terms of money going to women-led companies. And I think you need to see more women-led companies generating high returns for investors. And I think that's what changes investors' behavior. Australia looks at these stats. Heads Over Heels is focused in Australia, but Australia looks at these stats. And I think a couple of years ago, a stat came out saying that of the VC dollars that went out, 27% went to companies that had a female founder or co-founder, which is huge.
That's huge.
And I think one of the reasons for that is, one of our most successful companies in Australia is a company called Canva. I don't know if I know Canva. Heard of Canva. Yeah. Yes. And their valuation is like $50 billion now or something. And it's run by a young woman, Melanie Perkins. So I think when Australians think about how do you make a lot of money in as an investor in tech, they're thinking, they're thinking you can do this by backing a woman.
Yeah.
So
I love it. So tell me about Lighter Capital. Like, we started to touch on it. What is the exact business model, and how is it different than a traditional VC?
Yeah. So we don't take equity. So we invest primarily, or we fund primarily B2B SaaS companies. So we look at companies that have recurring revenue, and it's very simple in that we will say, we'll give you $1. You're going to pay us back. It's a fixed amount, but usually it's around $1.30 over 3 years. So, and you're going to pay us back based on 1% of your revenue until you've paid us that $1.30. And we model it that they'll pay us back over in 3 years, because we're predicting what we think their revenue will be and saying, okay, we're going to get this $1.30 paid back in 3 years. But if the company grows really quickly, or if they get acquired, then we get paid back faster. And, company doesn't pay us back any more money, still $1.30. But we get paid back faster, which means we have a greater IRR. If they grow slower than we predicted, or if they go out of business, we'll lose money or potentially not even cover our cost of capital. So it just aligns us perfectly with the entrepreneur.
Right. So you're coming in later than, you're not coming in at like the pre-seed or seed round, because they need to have traction in
Well, the
revenue?
minimum revenue is 15,000 a month. So
15,000
it's
a month.
usually,
Okay.
yeah, but we have companies that have over 20 million in revenue. A lot of times those are companies that grew with us. But we've done, I think, 850 financing rounds since we've started.
Wow.
And so there's a lot of great stories. One that I love to tell because it's such an extreme story is a company called Seamless AI. That's it's a husband and wife founding team, Brandon and Danielle, and they took money from us when they had 3 million in revenue, and they took a couple $1 million loans, and then they used that money to grow to over 20 million in revenue. So they got from 3 million in revenue to over 20 million in revenue with zero dilution.
Oh, it's incredible.
And Brandon stands up and says he's personally worth more than $100 million more as a result of taking this lighter capital, non-dilutive money than if he had taken, because he had offers from VCs when he was 3 million in revenue, but he grew it to 20 plus million and then did a private equity round. So, that's an extreme story, but we gave $240,000 to Fishtown Analytics, or we loaned $240,000 to Fishtown Analytics. That's now called DBT Labs. They went on to raise 5 million from Andreessen and then 30 million from Sequoia. And then they just did a round and now they're a unicorn. So, they were able to, take our money early on, no control, no dilution, to
and
get
do you
them
take a
to
board
that next.
seat?
No, we don't. This is what's so great. We help the companies with connections, and we help them when they're ready to go raise venture capital. We'll help them with their pitch deck. We'll help them with introductions, but we don't take any control. There's no financial covenants. So it's and VCs. I was a VC for a long time. They can be super helpful, but they also can be disruptive if they have different exit.
There's not alignment. Yeah.
If there's not alignment or or if there a lot of times what VCs do really often, because they have to, it's their business model, is they just push companies to grow too quickly, and they put too much risk on the companies. And it's exactly as VCs should behave, because they're going for those unicorns. They need every investment to have the possibility to pay back their fund. So, a lot of times they're pushing, entrepreneurs kind of out of their comfort zone.
Right. Where the entrepreneur might be holding on strong to product market fit and aligning to make sure that the product is actually where they want it. And they're just focused on we'll sell.
Right. And we need, get that up round, you have to show that huge revenue growth, get that up round. That's, and that is their business model.
Yeah. And how does the deal flow come to you? How do these entrepreneurs find you? If someone's listening right now that could potentially use some funding, or loan, how does it work?
It's a super simple process. So there's a pre-qual where you can go in and spend less than a minute if you're a slow typer, just to see if you might qualify. And that's sort of are you a tech company? Do you have, if all of your revenue comes from one customer, we wouldn't be able to fund it because it's too much risk since we get paid back on revenue. But there's that. So that takes less than a minute. And then our application is 10 minutes. Yeah. So our application, we take the data from your bank and your financial, from your accounting platform. And so compared to going out and raising a VC round, which can take, months, this is something that literally takes minutes. And, you could be funded in a couple of weeks.
Well, it's hard for entrepreneurs too, though, because I'm thinking about people that I know, even right now, that are building companies, and they may be just kind of beta testing their idea and not charging customers.
Right.
And trying to kind of find product market fit. They're also trying to fundraise. They're also trying to hire. It's a tough job, being an entrepreneur, just trying to.
It's the hardest job in the world.
It's so
maybe not the
hard.
hardest in the world. I don't know. There's probably some, but it is not easy. It is not for the faint of heart.
And is it just as simple as the criterion that you mentioned as far as qualification, or is there some sort of analysis on who the person is that you're actually investing in, the team?
So there's a lot of data that goes into the decision and goes into the pricing, but team is not taken into account at all, which is completely different than the venture model.
Yes.
So the venture model is, team's the most important thing, and that's a completely subjective measurement, which is why, all these unconscious biases come into place, why you see such a small percentage of women getting funded, because that's not what,
Right.
you're used to seeing in terms of successful exits.
Absolutely.
So,
Underrepresented founders for sure, combined even with the pedigree thing. I think sometimes I hear about people, they got funded and it's like, you don't even have an idea hardly, but we've got the pedigree, or we've got like, you know, I worked at these two companies and I went to this school, and it's actually really fascinating.
College people went to. I mean, maybe we should put it in our credit decisioning, but actually be interesting. We have so much data now after doing this for a decade. We should look back and say, you know, did college graduates on average do better than ones that weren't, or because we don't
or
take
even
that
which
into
school.
account
I think
at
it would
all.
be fascinating,
Yeah.
Melissa. And I think actually, if you start to show the ROI to the community, it would be actually super fascinating, because it is still a good old boys network. I mean, it just is.
Yeah, no, absolutely. And we don't, it doesn't go into, because it's not quantifiable.
Right.
Without using subjective measurements and
Interesting. And so can you tell us what the data is that you look at?
well, the primary thing that we're looking at is revenue, customer churn. We want to see low customer concentration. And then, you know, into the credit decisioning, a lot else goes in.
What about like total addressable market, or size, or like speed of like where they are in the market as far as first to move? No, none of that.
No, not really. No. And so you know, sometimes we're funding the number one player in the space, but sometimes we're funding the number 3 or 4, because what we're looking at, are they going to pay back our loan? You know, we're not taking equity in these companies. Are they going to be able to pay back our loan? Yeah. So, you know, I love to tell the story of Fishtown Analytics. That's a unicorn now after taking $240,000 of our money, right? But you know, we made the same from them as a company that, you know, just maybe chugged along.
It almost must be hard. I feel like that would be like hard almost, like to not feel like, oh, imagine if I had an equity piece of this company. A little bit.
Well, yeah. I mean, it's funny because when I was on the board before I was the CEO, I thought, oh, should we be taking equity? Should we push for warrants? But now being in it, I see it's just very much our value proposition not to. Yeah. As we go up market, if we get more into venture debt, I mean, one of the things we do see is we have some companies that kind of graduate out of us and they still want to grow with debt, but we're capped at 4 million. So, you know, some of our best companies that get to that point where they could support, you know, over 4 million in debt and want to keep growing that way. We'll introduce them to, we partner with a lot of traditional venture debt providers. Yeah. Who will take, you know, they'll typically take 1 or 2% of the company in warrants along with a debt piece. Yeah. So it's not, I mean, it's not. But your model is so much more. It's our business model, right?
And it's so much more founder friendly that it almost feels like, you know how you're recommending something to a friend, but if you felt like you were getting paid on the back end, you wouldn't probably recommend as purely. This is like purely like, it feels clean. It feels just really simple and clean, and that there's no weird agendas and there's no weird, I don't know. It feels really good. Like business. Yeah. I like it.
Yeah. And it is really good. You get in, sometimes people will say, okay, what's the catch? What's the catch? And it's like, there's no catch. You know, there's no, this is what it is. And we've done pretty well with it.
Yeah. Interesting. And so what have you done as far as being CEO of, you know, you're in a male dominated industry, you're leading, I'm guessing mostly remotely, your team?
Yep. Mm-hmm. We went remote when the pandemic happened. I came on board as the CEO in September of 2020, but we went remote, you know, as everybody did. But we got rid of our super expensive Seattle lease. A lot of our team members moved out of Seattle in the pandemic, and we said, that's great. And I don't mean moved out of Seattle, like moved to Issaquah. I mean, like moved to like Georgia or California then. And it's wonderful because now when we hire, we're not limited to the Seattle market, which, as you know, is like a really tough market for tech to hire in.
It opens up a way bigger talent pool for everyone. And it also, you know, when the surveys have gone out recently talking to candidates, and we've talked to candidates, they don't necessarily, I mean, a lot of people want some sort of hybrid model, but they definitely would probably say no if we said a client required them to come to work.
Is that right?
They don't want to. I mean, they want some sort of either combo of remote or hybrid. But if
Yeah.
it was like, hey, no, you need to be in butts and seat 8 to 5, 9 to 5, whatever, 5 days a week, that candidate, I mean, that client would have such a small candidate pool to source from.
Yeah. Yeah. And it's not
changed.
just a health issue, right?
Yeah.
It's sort of like a way people want to
It's a
work.
lifestyle. Yeah. People have found that
Yeah.
productive. Or like you're talking about exercise, before I'd get up and go 6 a.m. to the gym. And now I'm like,
Do you do
maybe
that every day, Shauna?
no,
Wow.
but I'm saying I try to work out 5 or 6 days a week, but I'm much more likely to since the pandemic because I might do it at 11. Like in between a
Right.
call, like I'll just, party on the top, work out on the bottom, outfit on Zoom, and then like quickly jump on the Peloton. Like you can get a little bit more where to me, that's like treating the whole person, or being a mom who might want to feel like I could throw in a load or go pick up my daughter in between 3 calls.
Right.
And I feel more grounded in that, but I also miss my team tremendously. And so it is this weird balance.
Yeah.
So my question for you is like, how have you led through, I mean, this is all it sounds like at Lighter as being a remote leader, but how have you shown up as a leader through pandemic and needing to kind of keep people's mental health in check?
Well, one thing that's interesting, when I came to Lighter, their vacation policy, which I guess is pretty common with a lot of US startups, is unlimited vacation. But if you're going to take more than 4 weeks, you need to get permission. And I thought, well, that's a really generous policy. In Australia, people have 4 weeks and everybody takes it. But what I found out after showing up to Lighter is that people didn't take vacation, that the culture was sort of, even though they had unlimited vacation, they actually weren't taking it. And I think it's so important to get away and get that downtime. So what we put in place was we actually pay people a bonus if they take vacation. And if they take a week, we will give them $500. But if they check their email, no $500. So we celebrate it. Like when someone takes a vacation and gets the $500 bonus, which, $500 is not going to change anyone's life or even pay for a vacation, but it's just to say, look, we really, there's a problem if you're not doing this. And we know that you're going to be, better, you're going to be a happier person and, just a better contributor if you do get away.
Well, especially now because there's such blurred lines because people are working 24/7. Right. They're like, I'm on email, I'm going to bed with my phone next to me and waking up and checking my email. Right. And that does create I'm not just saying it, I'm actually measuring it and I'm putting my money where my mouth is. I'm giving you actual money. That's amazing. Wow.
Yeah. Well, and then we, the one thing this is something every time I meet the CEO of another startup or tech company, I ask them how they're handling the remote piece because Lighter has such a great culture. And how do we keep that going, when we're not together every day? And so we're constantly, trying to figure out best practices for that. What we've settled on, and it's so hard with this pandemic, what we've settled on is twice a year, we're going to get together in person in some really cool place. In March, we're going to Hawaii. And, it'll be, company updates and that kind of thing. But, it's more about just that sort of intense.
That's amazing.
Water cooler bonding.
My team is going to Mexico all together in March. So we might be
awesome.
plus their plus ones. And we actually have rescheduled it because it was supposed to be in March 2020. Then we moved it to 2021.
Oh,
now we're finally going to 2022.
Oh my gosh.
And I just find it's just going to be incredible. Like the bonding. And I'm like you, I take the culture thing very, very seriously. I don't take it for granted that people wake up every day and have choices. And the fact that they've chosen to work with us is an honor. And so I love that. So twice a year, that's incredible. And then you're giving this vacation. What other things are you learning from people that are good takeaways? I always, half of me is like, I do the podcast just selfishly to get nuggets.
No. Well, so one thing, and in fact, I'm just about to put a blog post out about it is, and you would be right in the middle of this as a recruiter, but when the Great Resignation was happening, and we've had really good retention at Lighter, but in September, October, we had 3 people resign within a couple of weeks. And I thought, oh my God, what's happening here? And they all resigned for really good reasons, and either going to a different place that made a lot of sense or something we couldn't offer them. But I thought, okay, how do we handle this? Because that's kind of the biggest stress a CEO has. If you're doing everything and trying to provide the right culture and the right opportunities, and still if you lose someone. So what I said to the team is, I said, look, we want everyone to stay here. It's a phenomenal team. But if you are going to look around, let us know. And we might not have the next opportunity for you. I mean, there's not opportunity for everyone to move up when you're a small company, because there's just nowhere to go in some roles. So I said, but let us know. I will use my network. I will be a reference for you. I will use my network to introduce you to potential employers. We're here to help you with your career, whether it's at Lighter or elsewhere. And, we really live by that.
That's so interesting that you say that, because I just had this exact conversation with my team, because I had the same thing. We never lose people. We've had such great tenure. And then we lost a couple of people after being with me for like 5 years plus.
Yeah.
And there is that like small company, like where is there to go? And one woman who's just been phenomenal gave me about 4 or 5 months notice. And we've been trying together to try to find something great at Fuel. And the way she handled it was so incredible. And I said, let me help you. Like, let's work together. I've got this network and we'd be happy to help. And so I used it as an opportunity to talk to the team and say, listen, there's nothing worse, especially in a small company, that you feel like you're trying to do everything intentionally to build like a family culture of transparency and like holistically treating the human, not just like, what are you bringing to the table for the bottom line, but like truly, like we build these strong relationships. And I said, I never want, it's the worst feeling when someone walks in and is like, here's my 2 weeks, I've taken another job. It's like, oh my God, it's hard not to get your feelings hurt. So I said, never feel like you can't come to me, and we can try everything to make it work. And if not, we can help you. I think it's so, I love that. You're the only other person I've heard that's actually said that to their team, but I could just see on Zoom, I could feel people's energy relax. Yeah. It just takes the pressure off. It's like, listen, it's okay if it's not for you. Let us be part of the solution together. I love that. Interesting.
One of our portfolio companies, and I won't mention it because I just haven't asked for their permission, but when we did our CEO summit, which was great, we got a bunch of our CEOs together and went to Arizona, and like, it's just amazing what comes together when you've got to see a whole bunch of CEOs of different, high tech growth companies. But we were talking about, this was in October, so the Great Resignation was fresh on everyone's mind. So we had a panel to discuss that. And he talked about how one of his key employees came to him and said, I've been approached for this job at really, well-known company that kind of everyone wants to go work for, a big company. And, I just wanted to tell you, I think I'm going to go for it. And he said, great, let me help you. And she had to put together a PowerPoint for the, for the interview, and he helped her with that and spent, time after work helping her get ready for it. And he did not want to lose her. She was like his right-hand person. And then she got the offer, and at the end stayed with him. So
I love it.
Yeah.
I love it.
And I mean, look, that's not going to be the outcome all the time, but I think, it's a collaboration, right?
Well, and it's a sign of a good leader, I think, when you're mentoring people and developing them and hoping that they continue to grow. And if it's with you, awesome. If it's not, it's really hard to lose good people. And I'm not saying this to encourage anybody to leave you or ever. We don't want that. But it is actually a sign of an incredible mentor and leader, I think, when you're developing people to that level. Melissa, how do you find time for all of this? And my question for you is, with time, I guess, being our most valuable asset with your 4 kids and running Lighter and traveling and just all these boards, through what lens are you deciding which board seats you'll take? And that's the first question. The second is, what makes somebody a good board member?
So I don't sit on a lot of boards now. Like I've sat on a lot of boards. But over time, like you have, right.
I mean, it's incredible.
But right now I've got Lighter. I'm on the Shore Foundation board, which is where my kids go to school here in Sydney. And then Heads Over Heels, I chair. So those are, and I've been approached for other board positions, and I don't have the time right now. I might in a year from now, but right now there's just so much to do at Lighter that I don't have the time. Look, time management, time, that's, if you figure that out, tell me, Shauna.
I haven't figured it out.
I would say, one thing, this is something that this guy named Paul Taylor, who's like this guru coach, motivational speaker who NAB, would bring in to talk to team members when I was at National Australia Bank. And he taught something called the catastrophe scale. And I talk about this all the time, but it's, he says, okay, think about like the worst thing that happened to you last week. And where does it sit on the catastrophe scale? Like a, 1 to a 10, right? And 10 is like worst and 1 is not so bad. And before he goes into that, he talks about what stress does to your body and to your productivity, and how like stress just really is damaging. It's not good for you. Not just not good for your productivity. Maybe some people thrive on stress, but it's actually really bad for your health. So, people think about the worst thing and they go, oh, okay, that's an 8. And then it's something that, had a bad presentation with your boss. And then he goes, okay, now imagine you came home and you found out that your whole family had been killed in a car crash. He goes, where's that sitting? I was like, oh my God, that's a 10. He goes, no, that's about an 8.5. And then he says, imagine like your family's beheaded in front of you and then you're forced to go fight in ISIS, like my mate so-and-so had to do. Because, maybe that's a 9.5 or a 10. And what that does is it just goes, oh my God, like, why am I letting stress over these things that really don't matter? Why am I letting this stress me out at all? So I think that's something you just kind of learn with age, and that helps with the time management, not knowing you're not going to get to everything. And at the end of the day, you're just going to do your best.
Right. It's about like the perspective. But so for you, having been on so many different boards, what has made you feel like it's worth your time, and what makes somebody a good board member?
So a good board member, there's so many different ways you can be a good board member. One, just, I have a great board at Lighter Capital, and the board, they're always there. They're supportive when I need it. They provide great advice, and they open up their networks. So I think depending on the needs of the company and the needs of the CEO, being able to open up the network is usually the most valuable thing that a board member can bring. There's the advice and the sounding board as well, but those are things you can get from a lot of different places. I know when I first started serving on boards as a venture capitalist, I really didn't know what I was supposed to do and how I was supposed to add value. And, I would try and get in and kind of help run the company because I was an operator. I wanted to add value. And I think that's the thing to think about when you have a board that is, that's mainly made up of investors who are there because they have a right to be there because of their investment, versus ones that you invited on, is that they're all, most of them are really just trying to be productive. So I've met so many entrepreneurs who don't use their boards and don't reach out to their board members. They just assume they're very busy, and they are busy. But in my experience, board members really want to be helpful.
Yeah.
So I would say find out where the needs are of the CEO and help them, and support the heck out of the CEO until you don't, and then get a new CEO.
Get a new CEO. And so, yes, the network is super helpful. But if you were to go right now and run and operate a different company, not Lighter Capital, but operate like a tech company, what is your personal like ninja skill? I know mine are really, I'm very clear on my strengths and I'm very clear on my weaknesses. Like, are you more of a marketer? Are you an operator? Are you like a product person? Like, where are you? Where do you excel?
I would on the sales side. Yeah. And sales and vision. Yeah.
That's awesome. I love the feeling of sales. And I've always said this, and I say this to my kids. I'm like, if you can sell, like, you're always going to be fine. Always you can land on your feet. Like, at the end of the day, I'm like, I just think it's an incredible skill to have, because if you can create revenue and you can create business out of something, it's like the rest of it. Well,
starting a company, you are in an ultimate sales position, Shauna, right? Like, because you are selling people on their future.
Interesting. Yeah, no, it's true. And I think, but for me, like I don't think of myself as being like my special skill being sales. I think of my skill as being connecting people.
Right.
Like, I love to connect. Like, I want to, in my mind, I'm like, even through this conversation, I'm like, ooh, I need to remember to introduce Melissa to these 3 people.
Yeah.
Because in my mind, if it goes well, I get a little hit of some sort out of it.
Yeah.
You're a connector also. And I think that that's something that's just like, you either have that or you don't. And I love to do that. But sales is like quintessential. When I hear the word sales, I think of like calling and then calling again and then calling again. And I'm actually really bad at that. I lose patience and I lose interest and I don't have like systems. And I think of salespeople as being like relentless. And I don't have that feeling of like, I need to win. I have the feeling of, I want these people to meet these other people and I hope something comes of it. And through that, sales have come. Like for me,
right. But I think that makes you an incredible salesperson because you're thinking about the ultimate, what's going to be the best outcome for your customer.
Yeah.
Right.
Yeah, totally. So how are you balancing your time right now? Like personally, I know you're trying to work out more. What do you do and I know we're trying to work on our time management. Are there apps or are there systems that you have in place to kind of set yourself up for a good week or a good month?
That's my New Year's resolution. So if you find something that works, let me know. But no, I need a lot of work in that area. I don't think I am qualified at all to advise in that area.
Do you ever pull yourself out, do like a planning of your life thinking moment? Like I never do that. I'm so busy in my life that I'm not necessarily working on my life. Like, okay, what do I want it to look like in 5 years or 10 years? Or do you do that?
Yes, but it's usually like been in a forced situation. Like, I mean, working at a big company at NAB, that was great for that because there were a lot of, there was a lot of opportunities for that and a lot of little programs for that. I'll tell you, and my husband says I'm really good at delegating. I might mean I'm really good at delegating to him, but I've never, I think, I wish my house, when I go to people's houses that are just so organized and like you open every drawer and it's perfect. I would love to have that.
You and I are the same human, Melissa.
I would have to have someone else do it. That makes you more productive because you're not spending time on those things. But I always am quite envious when I go into a house that is completely well organized.
What's sad is that I'm sure you do what I do, which is I start shaming myself for being like less than in some way, that I don't have those drawers. And then I'm like, and I'll comment on it because it's actually a total trigger of some sort for me too. Of like, why aren't I having the like countertops with not one thing on them and the beautiful orchid as like the centerpiece? No, I know we women put so much pressure on ourselves. It's absolutely insane. It's crazy. So here's my last question. What do you do to totally unwind and relax, if there's anything?
I read a lot. I read a lot. So
what are you reading right now?
Oh gosh, I'm reading Atlas Shrugged, and I had never read that book by Ayn Rand, but my son, who is a prolific reader and reads a lot of classics for fun, he said it was really good. And so I thought I would read it because it was never on my reading list in high school or college. And it's super interesting, especially in these times. So
I am writing it down. I always get such good nuggets in these podcasts. My final question for you is, what fuels you?
Entrepreneurs. Anytime I'm getting down, I just have a meeting with one of our customers and it just pumps my energy. So it's absolutely, I'm an extrovert like you are, I get my energy from other people. And from entrepreneurs, especially.
I love it. Well, they're lucky to have you, and I wish you much continued success. I'm tracking you and I'm super inspired by you. So thank you for joining on the podcast.
Well, and thank you, Shauna. And I want to give you a little bit of a plug. So we are working with you for the first time at Fuel Talent to hire somebody in marketing, as you know. And I was just I'm blown away by the service from Mindy and your team, but also just within 2 days of us, putting this job rec out, you delivered 5 amazing candidates, which
that's all Mindy and her team.
But I was just blown away by that. You have such a great reputation in the Seattle area, and now that we've gone to this virtual world,
it's endless.
It'll probably grow beyond Seattle. Yeah,
I hope so. Thank you. I appreciate that.